All right, guys, we're here with Arjun. We've got a lot to talk about. I think you are one of the realist people, and one of the people who are not afraid to say what you think and call out the projects that are frankly unworthy of existing.
That's almost all of them.
How are you?
I am doing well, man. I'm happy to be here. It's a
Absolutely.
nice muggy day in New York City.
For sure. All right, so for those people that don't know, let's just go through real quick your background, and then we can jump into a whole bunch of different stuff.
Sure. I will kind of start with my birth, only because it's somewhat relevant. I was born in India. We immigrated to the U.S. When I was about 6 years old. So first-generation immigrants, was pushed into the lawyer, doctor, engineer type mold. My parents are conservative gold bugs. Actually, we had a rich gold culture growing up, and still do. And so grew up, went to school in Boston, was trained as an engineer, and that's when I first found Bitcoin, was in 2012, 2013, at sort of the heyday of the Silk Road. That first run up in price, that was really exciting to watch. And my politics were already sort of aligned in that direction, in that sort of libertarian, anarcho-capitalist mold. And that was the first time I'd really had exposure to a wide group of people in that lens. Price action dies. I sort of lost interest along with that. It was just who's building anything. What's going on. It wasn't until a couple of years later that I saw what was happening in the community again, and started working on and kind of focusing on Bitcoin full time in 2016. And first thing that I was exploring is the market microstructure itself. Was looking at where were people trading Bitcoin, what were people using to trade Bitcoin. The markets still are very inefficient, but was far more inefficient back then. Exchange arbitrage was a very big thing. The spreads on the exchanges were very wide. There wasn't really any, there wasn't a lot of algorithmic execution. The volume was tiny, and so that was my first sort of area of focus. And so subsequently, over the next year and a half, and kind of with all of the run up in 2017. I spent a lot of my time helping people figure out how to navigate the microstructure and how to actually trade, these markets, and where there are opportunities to make money. And there are all sorts of questions there. Not only all the things that I described, but figuring out what the right way is to custody assets. And so, and that's sort of foregoing altogether the question of what do I buy. And so worked with a few large traditional hedge funds, helping them sort of evangelizing Bitcoin, helping them explore the space, and have since, for the last year, spent most of my time investing and trading my own money with, a couple of outside investors, and I'm in the process of institutionalizing that further, which is really exciting.
Awesome. All right, we're just going to start off with a bang here. 20 years from now, Bitcoin, where are we? And not in terms of price, but can we get to a global reserve currency? Can we get to it being used kind of coexistence with the U.S. dollar? What do you think is possible here?
Sure. So I think that right now Bitcoin is a global settlement layer. We're already seeing that Bitcoin settles, right now, between $1 and $2 billion a day, right? Notional, which is in U.S. dollars, which is a substantial amount of money. I think that over the next 20 years, that number is only going to continue to go up. I think over the next 20 years, we will have figured out, ways to make Bitcoin viable for small-scale payments as well, which won't be, which I don't believe are going to be on chain. I think in terms of its existence in the global financial system, I see over the next 20 years, I think it's entirely possible that, central banks will hold Bitcoin reserves. I don't know that it can achieve any sort of reserve status currency over the next 20 years, even in our wildest dreams. But I think it's entirely possible that it plays a significant role, especially as smaller developing currencies start to collapse. I think what people often forget is that the median lifespan of most nation state issued currencies isn't that long, right?
Mm-hmm.
And sort of even we look at the U.S. dollar as having longevity and the U.S. government being the sort of lender of last resort. But and the U.S. government, in the grand scheme of things, has existed, and dollars have been in circulation for a substantial amount of time. But I think that, especially with much smaller currencies, we're seeing what happens with poor monetary policy. We're seeing it in Iran and Venezuela and Turkey now. And I saw that. I think you put out the tweet earlier this week that Roger Ver stole. But we're seeing the collapse of currencies all over the world. I think that there's a further conversation to be had about whether Bitcoin does become a global reserve asset itself, where and this process is what a lot of the Bitcoin maximalists, of a group where I would consider myself firmly in, consider sort of hyper-Bitcoinization, right? So post-hyper-Bitcoinization, Bitcoin is stable enough to be a viable means of exchange and unit of account all over the world. But I think well before that, there could exist sort of in a free banking type model, nation state issued currencies that are just pegged to Bitcoin. Similar to how we had the gold standard, and before that in the late 19th century, early 20th century, we had all sorts of bimetallic pegs, all of which collapsed for a host of reasons. But I think that the first step in that process will be actually returning to a Bitcoin reserve, and this is something that Saifedean has covered in detail in the Bitcoin Standard, and I think sort of before that we'll start to see substantial growth even from the volumes it's doing today in Bitcoin's utility as a global settlement layer, where it's already settling numbers that annually are comparable to gold markets.
Absolutely. And so as this global settlement layer becomes more prevalent, do you think that these smaller currencies and smaller markets actually gravitate towards it in the short term? Or do you think it's something where they'll continue to kind of flounder and really suffer until some other event makes this overly attractive to them? Right?
Sure.
Because if you look at Turkey, for example, right now, there's some flight to Bitcoin, but it's not kind of half the economy. Sure. Right, and so how do you think about that?
Yeah, I think that there's two ways of thinking about it. One is over a very, very long-term view, and the reality is that in that very long-term view, so long as it survives another day, Bitcoin's almost like a black hole, right? Mm-hmm. It's a black hole sucking in all assets that are weaker forms of money. I think that over a very, very long time horizon, it's entirely possible that this could include the U.S. dollar. On shorter time frames, I think it's most relevant to even see what's happening in Venezuela, for example, where citizens are swapping bolivars for primarily dollars, but also Bitcoin, because even dollars, despite the fact that there's a substantial number of dollars that are printed every year, are still a significantly harder form of money than bolivars. And I think that what will happen over time is that people will always have the sort of inclination to use their weak forms of money and to acquire and hoard stronger forms of money, especially if they don't have widespread access to it like they do Bitcoin. And so in the short term, I think that we'll start to see the shift in economies where they absolutely have to, where they have no other choice. So in Venezuela, even if you had bought Bitcoin at the highest possible local rate at the peak of the market in December, your purchasing power in relative to bolivars would still be twice what it would be if you had held bolivars, despite the fact that Bitcoin has dropped by a factor of 3. And so I think that in the short term, we'll start to see shifts where people have no other choice, especially in countries that have significant capital controls, where they're still able to bring in Bitcoin. And in the long term, we'll see. We'll have to. I think that it's inevitable that we'll see a convergence effect there.
Absolutely. Yeah. One of the things that's interesting to me is a lot of people talk about the currency element of Bitcoin, right? But there's also a income aspect to it as well. And so earlier this week, I wrote this thing, a gentleman from Venezuela, right? So he's a lawyer. He's got 3 young kids, and about it sounds like 2.5, 3 years ago, he started to feel some of the economic pressure. He started a business for spare car parts, right? And so as he's going through, more and more inflation's hitting, and right about the time where he realizes, 2.5 years into his business, hey, this isn't going to work, he discovers Bitcoin, cryptocurrency, etc. And so he's not, poor. He's not wealthy by American standards, but, he had a little bit of money, and so he bought Antminer S7. And so he starts mining cryptocurrency, right? Bitcoin specifically. And then he bought another machine. And now his family literally lives off of the income that they receive from a couple of these machines. And so it's, as long as he has electricity and he can plug that machine in and he's able to then go from Bitcoin to fiat, he's got an income stream regardless of the economic situation around him. And when you do the math, I think that one of the interesting parts is he was telling me that the minimum wage in Venezuela today is $1.25, right, in kind of the U.S. Currency. But a S9 is mining, $110, $130, depending on where the price and difficulty is. And so it's making him wealthy compared to that country's standards, in that, kind of perspective. How do you think people in those countries will continue to use cryptocurrency, whether it's trading, mining, etc., as a supplement to income, not just as a store of value?
Sure. So I don't. The original vision for 21, as I remember, was actually that they were going to produce ASICs that people were going to have, all over the world. That was going to be embedded in their IoT devices, on their phones, etc., and that everyone would sort of, latently be, earning Bitcoin on a continual basis, and that autonomously all their devices are going to be able to frictionlessly sort of transact with each other. And a lot of the original visions for Bitcoin very much imagined the world expanding in this way, where people would be mining their own Bitcoin, and that miners, wouldn't really be industrialized the way that they were. I think that was a mistake that many, not a mistake even, but just necessarily something that early Bitcoiners often didn't anticipate. They didn't see the growth of industrial scale mining operations, especially concentrated in China. I think that the way I think regular people can be significantly impacted with Bitcoin is actually an extension of what's already happening via the internet, where they could live in a regime with substantial capital controls, but so long as they have sort of unfettered access to the internet, either directly or via VPN, there's pretty much nothing preventing them from earning global sort of living wages, so to speak. The best example that I can describe here is actually recently I bought a wallet. I bought a wallet directly from someone in Venezuela, not a Bitcoin wallet. I bought a physical wallet, and the wallet has some significance. I have it in my backpack, so I'll show you. But the wallet is made out of bolivars, because that's this kind of reflective of how much the currency is worth. And so I bought it. I wanted to support this guy and his family. And now the thing that I've been talking to him about is setting up a storefront for him so that he can accept Bitcoin payments directly, ship things out directly, because he still has entire freedoms to do that, where they can earn a wage entirely independent of their financial system.
Yep.
It allows him to accept Bitcoin directly. And so we've been working on trying to figure out the best way to get him up and running there. I think that that's what's really unlocked is this sort of frictionless commerce that can take place all over the world. And it's easy to produce commentary and say, well, transaction fees are 50 cents, and it's really hard to open a Lightning channel, and nobody's really using the Lightning network yet, and there are all these problems. But I think the reality is that if you sort of look at it bottom up and you see how people are using Bitcoin on the ground and what people's sort of psychosocial perception is of it, it's easy to see how it's changing people's lives already.
Absolutely. And I think the incredible part is, what are we, 10 years in? Less than 10 years, right?
Yeah, less than 10 years.
And so it's been pretty impactful, on that global scale. What do you think about Wall Street kind of it seems like turning a corner a little bit and starting to say, from the previous statement of, not Bitcoin, but blockchain, to now it sounds like definitely blockchain and maybe Bitcoin, right? is kind of, I think, where we are right now, where people are saying, maybe there is actually some value to this digital currency. It's got a deflationary model, et cetera. How do you kind of see that impacting, one, the currency, and then two, kind of, the future outlook?
Yeah, absolutely. I think that Wall Street is in the business of taking fees, right?
Mm-hmm.
Wall Street it's fundamentally investment banking, commercial banking, etc. It's a middleman business. It's a business where you have a corporate entity who's providing a service for clients and taking a fee for being in the middle of transactions. Fundamentally, Bitcoin is about the opposite of that, right? It's about the ability to trustlessly disintermediate that process entirely and conduct frictionless commerce with two different parties who don't have to know each other. And it's not a surprise to me that Wall Street has historically not been receptive to Bitcoin, why they've chose to focus on sort of blockchain, not Bitcoin. I think that blockchain for Wall Street is actually something that is fundamentally nonsensical. Because it's a close friend of mine, Murad, often likes to say that blockchains don't create revenues, blockchains destroy revenues. By their very nature, if done correctly, they would take away revenues from the core businesses of many banks. This sort of alternate parallel capital market structure that people are building is actually a universe where traditional underwriters and middlemen don't make any money. And we're starting to see the downstream effects of this. ICOs this year have financed much, and this is nothing to say of the quality of these ICOs, which is extraordinarily poor, but ICOs in aggregate have raised more money globally than IPOs have in Q1 and Q2 this year. And so I think that there is a shift and a focus on Bitcoin, but I think that it's more driven by just demand that they're seeing from high net worth clients, institutional clients, about custodying, trading Bitcoin, about buying it, holding it in their accounts, about providing prime brokerage services around it. I think that some of the more savvy banks are looking ahead to this, but I don't think the fundamental attitude has changed. I still see a lot of enterprise blockchain, permission blockchain projects, none of which have shipped anything of value. I think it's pretty safe to say that to date. And a lot of these efforts have actually imploded. But Wall Street, there's a number of things that they bring. I think that the capital that comes with Wall Street is very important in order to sort of institutionalize Bitcoin as a real asset class. I think the second really important thing is that with Wall Street comes a lot better security tools, custody tools, market infrastructure, liquidity, all of which is good for all Bitcoin users, not just Wall Street. I think the third thing that's really interesting is that with Bitcoin is going to come, Bitcoin on Wall Street is going to come all sorts of interesting new financial products, some of which I've been exploring, but the lowest hanging fruit is sort of ETFs and options and other derivatives products, all of which I think help contribute to Bitcoin's path as a highly liquid, saleable good.
Absolutely. What was your first experience with Bitcoin, and like what drew you into in? Right, what was the attraction to the tech?
Yeah, so I my first interaction with Bitcoin was actually transacting on the Silk Road. Free Ross. If anybody listening doesn't know the Ross Ulbricht story, that's it's a great story. Despite the fact that he was framed. So Free Ross. But that was my first exposure to Bitcoin, and first it just seemed like a sort of gimmick, fad, fake internet token and I didn't even think twice about it. I didn't think about scarcity. I didn't think about anything else. And then sort of later that year, early in 2013, was when I first started to look into it and sort of think through, hey, why are people interested in this? What is the appeal? Who works on it, right? Because, admittedly, and this is kind of embarrassing, the first time I saw Bitcoin, I actually thought it was a company. I didn't realize it was this, sort of globally distributed network. I thought, I was like, what's this company Bitcoin? Who runs it? What are they working on? I can't find their website.
Yeah, they got some wild ideas.
Right, exactly. I was like, this is kind of a crazy idea. I was like, I love it. So that was my first exposure. It wasn't until later that I actually read the white paper. I tried running a node. I bought my first Bitcoin. Before that, it was I did a Western Union transfer to Japan, actually, to buy Bitcoin on Mt. Gox. I'm still involved in that class action, but it seems like we're getting paid. So there's some good things that happen. And once it all sort of clicked, how it was, sort of resistant to government shutdown, what the sort of novelty was around, having a digital scarce resource, et cetera. Once that clicked, everything kind of made sense from there. And but it took me a long time. I remember I looked at it recently. I looked back at finding it from over 5 years ago to figure out what was the first thing I ever said about Bitcoin on the internet. And the first thing I ever said about Bitcoin on the internet is, played around with Bitcoin a little bit today. Looks interesting, but not sure the UX is there for the mainstream. And we're here 5 years later, and the UX is substantially better. Companies like Coinbase exist now, BitGo, Ledger. There are a number of great wallets. There are a whole host of exchanges. There's a lot of places where you can spend your Bitcoin, a lot of merchant payment tools. But the UX still, could use a lot of work, and it's something that dozens of teams are working on. So it's awesome.
Absolutely. Well, let's talk about the retail adoption, right? In terms of there's a lot of technologists in the space that are fairly deep in the weeds, right? When it comes to how does the tech work, where can we solve some of the scalability issues, et cetera. And I think that they probably are not thinking as much about how do you drive adoption of that mass consumer, right? I think you mentioned that there's can be some financial products and things like ETFs that could potentially help open those gates to crypto. What has to happen on the UX side to make it easier for kind of that mass consumer to not use a retail financial product like an ETF, et cetera, but still get much easier access to buying, holding, and transacting Bitcoin?
Yeah, so I think a lot of that UX actually does exist in really good ways. I think Coinbase, despite a lot of their foibles, has done a pretty good job of it. I think Square has done an amazing job. I actually think Square has now the best experience for using and working with Bitcoin. Mm-hmm. But I think that a lot of the, when people say we need more user adoption or growth, they're often focused on the usability of products that interface with, with cryptocurrencies. And I actually think that that's not the sort of main bottleneck. I think that the harder problem is actually, shifting the narrative, right? It's explaining and educating investors, whether they're institutional, whether they're retail, on what the merits of a non-sovereign money system could be, mm-hmm. right? And I think from there, branching into and exploring, what are other forms of money that could exist besides crypto money that could exist besides Bitcoin? What is the path to monetization of something like Ether, et cetera? But it's, I think all of that is grounded in an education campaign more than an actual usability exercise. I think what we've seen in the past, especially in the last retail run-up, is that a lot of the emphasis was around retail investors trying to seize what I'll describe as the next Bitcoin, which mm-hmm. I find is pretty misguided effort, But we saw Ripple run up substantially. We saw EOS and Ether run up substantially. And I think what was couched, and we saw Cardano run up substantially, especially in Asian markets where it has very broad-based appeal. I think that all of these users are looking for something that is better, faster, cheaper, has higher transaction throughput, et cetera, than Bitcoin. Mm-hmm. Right? I think that that's what's driving a lot of retail interest, is because they think that they can capture something that is meaningfully better than Bitcoin on those axes. And I think that approach is actually totally misguided. I don't think it makes much sense. I think that what that reflects to me is actually that users don't understand the value proposition of Bitcoin, right? They might be buying Bitcoin, they might be holding Bitcoin, they might even be using Bitcoin. But I think that education campaign is kind of the first place to start, is teaching all investors, institutional or retail, what the value propositions of Bitcoin are, what the history behind cryptocurrencies is, and kind of where sort of value can accrue and be captured long term.
Absolutely. And so, do you think that the people who are looking for these alternative coins or kind of improvements to Bitcoin, how much of it is human greed because they think there's going to be appreciation of price versus they're actually being thoughtful as to this is going to be better than Bitcoin, and I truly believe that, and would hold it for 5 years, right, or more.
Yeah, I think that, and this is the reason why on Twitter I make jokes about this, because on Twitter, traders and investors are always talking about alt season, right? Mm-hmm. When is alt season? When are all the altcoins going to come back? And what's that shift? I think that alt season will always come back, right? Even with so many of these altcoins down 90%, I think alt season will come back. And the reason for that is because crypto networks have such small penetration into the kind of global consciousness, and human greed is so immense that I think it will come back. And where, about the greed improvement thing, I actually think that most crypto projects are driven by greed. I truly believe that. The cost of issuing new tokens has fallen pretty dramatically. It's virtually zero now. Requires white paper, landing page, marketing team, roadshow, advisor list, actual contract deployment. So you can add on another 2 hours for that, and you're sort of good to go, right? That's what you need to raise money. And so I think that that mentality in reality has reflected in a lot of greed that we've seen from projects. I think that there are some people who in the world who have made efforts, though I find them misguided. I think Vitalik is a great example of this. Originally, Vitalik tried to bring Turing completeness to Bitcoin. There's a number of reasons why the community sort of pushed back against it, all of which in hindsight look like great reasons. And then Vitalik went and started a separate project. Similar things happened with the release of Monero or Zcash. I think that other projects have some novelty to them, but for the most part, especially as you get into the long tail of, say lending projects, right? There's 5 different crypto projects that are all working on some sort of lending token. I think where you get into that, it's much more grounded in sort of greed on the part of teams, or it's an existing team that's launching a crypto project, where really it's a play for non-dilutive financing. Because that's what all token raises are, right? There's no corporate rights, there's no pro rata liquidity rights. There's really no rights of any kind, right? And so I think a lot of that is short-termism. I think a lot of it is greed-driven. There are a few sort of brave projects out there that are vesting tokens, right? Which is an innovation the U.S. technology investor market has come up with decades ago. There are some teams vesting tokens over very long periods of time, 6 or 8 years, which I find to be brave, but something I would be terrified of as a founder. And so I do think it's mostly greed driven. And over the long term, I think it's great, right? It's bringing more interest to the space. And really all of these are free research projects for Bitcoin. That's how I view it. Whatever it is, if it works out long term, it'll find a way to get in. If it's something that's important and something people value.
So you got one of my questions there. This is something I want to spend some time talking to you about in terms of smart contracts, zero knowledge proofs, all of these kind of ancillary pieces of technology or concepts that are being explored by other cryptocurrencies or crypto assets, you think eventually get contributed back to Bitcoin as long as they have value and sustainability to them.
Yes, and it's already happening, right? Mm-hmm. So on smart contracts, the Rootstock team has spent a few years exploring this, and there's other teams exploring side chains to do smart contracts. Eric Martindale at
Fabric.
Fabric on working on Fabric is working on a potential layer. I guess we could call it layer 3 solution to building more complex scripting into Bitcoin. And so that's already happening to an extent. And I think the further Bitcoin monetizes, it's actually going to be increasingly relevant. There's actually another sort of reframing here, because when I say, hey, people are working on this stuff, the pushback I often get is, well, all of the dApps are still being built elsewhere. And the reality is that people don't want to waste their time, right? People, I think, largely people in the Bitcoin sort of development universe of, say roughly 500 to 1,000 people, of which there are probably 50, 75 really regular contributors directly to Bitcoin. And besides that contribution base, there's, thousands of people who are building on Bitcoin or or building services that have to interface with Bitcoin directly. These people don't like to waste their time, right? There's only so many of them in the world. I think that what they're focused on building right now is the most secure protocol that is most conservative in its assumptions, that is most safe in its sort of method of operation. And whatever else is important, we'll let the market dictate what is important and kind of incorporate that downstream. There are a number of, on the privacy side, I think one of the things that's been really interesting is this sort of Bitcoin development culture, where what it actually forces is a lot of the innovation that that would be on like a base layer chain to be moved downstream. And so on the privacy angle, a lot of the interesting things that people are working on privacy, they're sort of like improvements on CoinJoin or other mixers. Samurai Wallet I find really compelling as a project. They have an Android app but haven't released on iOS yet. And so a lot of the privacy components being moved to the transaction layer or a different layer, I think is pretty compelling in the short to medium term future. I am pretty happy with the privacy projects that are out there, particularly Zcash and Monero, both of which use different privacy mechanisms. I've been monitoring the launch of Grin pretty closely, which will launch later this year or early next year, which is another kind of another anonymous, fair-mined, interesting privacy project. And so I think that privacy is still something that's very important for Bitcoin users and Bitcoin developers and the community of original cypherpunks that primarily Bitcoin is coalesced around. I've seen demos of different, I don't want to name names, but I've seen demos of different chain analysis tools, and they are terrifying, man. I think that...
Why?
Well, they're terrifying because I think the logical implication of a lot of people focused on on-chain analysis, despite the fact that it is still a little bit rudimentary, there's still a lot of information to glean. I think that we'll quickly move to a future where if Bitcoin is not fungible, it's not fully fungible, we're gonna have different types of Bitcoin, right? We're gonna have clean Bitcoin, we're gonna have dirty Bitcoin, and it'll trade at different rates. And I think that that's not what we want in Bitcoin. I think we want fully fungible Bitcoin. The same way, gold is largely fungible. Cash, it has an identification in the form of serial numbers, but direct transfer in cash is directly, it's directly fungible, and that's part of the reason why drug dealers and terrorists often use U.S. dollars, right? They use cash.
It's their choice of currency.
Yeah, shout out Jamie Dimon. He was wrong about that, and so I actually really do worry about a future where Bitcoin isn't fully fungible, and do think that fungibility is something that Bitcoin developers are pretty concentrated on, and it's something that's improved substantially over time. And there's a number of proposals for different, everything from different signature types to full-scale re-architectures. But I think any sort of large-scale privacy would be many years down the line. But in the short to medium term, there are a lot of efforts focused on fungibility that I find compelling.
Got it. All right, so I want to walk through a couple of different people in the ecosystem, the position that they sit in, and you tell me what you think from that perspective as to what they should do or kind of how it impacts them. Right?
Sure.
So the first one, if you're the president of the United States, and you see Bitcoin. What do you do? And do you think it's a threat to the country, to the U.S. dollar? Do you think it's something that you should embrace? Kind of, how do you think through that framework if you're sitting in the Oval Office?
Sure. I do think Bitcoin is a threat to the U.S. dollar. But it's not the only threat to the U.S. dollar, right? So, I mean, the renminbi is a threat to the U.S. dollar. That we actually have renminbi denominated. We have petro renminbi futures contracts now, right? Which is very relevant. And so, if I were the president, my consideration would be, hey, this is a threat. And Pierre Rochard at the Nakamoto Institute has written about this in the past. In the future, where Bitcoin is a credible threat to nation states, we'll start to see more and more speculative attacks. And
what are the most likely kind of first couple?
Sure. I think that the first couple, we're already starting to see at the fringes, right? They're in countries with no capital controls. So take Turkey this week as a perfect example. And they're starting to get shut off, right? So, just this week we've seen Turkish citizens get shut off from PayPal. Soon they'll be shut off to other sort of internet retailers. And as their connection to the outside world is starting to get shut off, and Bitcoin, by the way, Bitcoin trading is not yet illegal in Turkey, but I do anticipate, either that Bitcoin will be made illegal, or that FX will shut down, or that I forget what I was going to say, but I anticipate that this will happen in the short to medium term future.
So you think that the first attacks are not violent in nature; they are more politically savvy in terms of trying to use either market forces, access to internet, access to communication outside the world, etc.
Yeah, I don't think that we're going to see sort of like full-on nation-state level disputes over Bitcoin yet. But I think that it would be, prudent, especially given the amount of Bitcoin, like this sort of industrial Bitcoin concentration in Russia and China, it would be prudent to own some Bitcoin, right? And there's been there are a few people working on this in Ghana, for example, who've been, lobbying and working with, the central banks of Africa to try to get them to hold Bitcoin exposure. I think we're fully at the point right now where it's more prudent to own a little bit than to not own any at all. And, I would approach it the same way if I were the president, right, is to do, two big things. One is to make sure we own some Bitcoin. And second, more importantly, is to be welcoming of entrepreneurs working on truly, decentralized systems. Because I think that what you have, and this has been described by a number of people, but the universe where the U.S. is not welcoming of crypto entrepreneurs is one where we effectively push away, sort of the potential architects of this open financial system elsewhere, and that's not a place that we want to be at all. And I think that could come with a lot of negative repercussions. And so I think the first order of priority is to be welcoming of Bitcoin and other kind of truly open networks and technologies, while also clamping down on, doubling down on investor protections and protecting retail investors from fraud, et cetera, et cetera. But I think that's less of a problem with Bitcoin specifically, and more of a problem in kind of a long tail of crypto projects. But I think that both of those things are really important.
So let's keep going with this example. You're the U.S. president. You say, hey, we should own some Bitcoin. There's, $2 or $3 billion a day trading. Do you just go buy, as much as you possibly can over a couple of weeks and try to build a, $20-30 billion position, or kind of what do you do?
Yeah, I think that, first I would call the guys at the NSA and make sure they didn't create Bitcoin. That this isn't some huge NSA ruse. These things happen, right? We'll find out 25 years from now what the NSA knew and didn't know. But even RSA encryption in a forum data actually come out with it privately. The NSA did 4 or 5 years before it was in it was went through academia. But sort of tongue in cheek, that's the first thing I would do. But in terms of accumulating a position, that I don't know the specifics about sort of what disclosures would be required or which branch of the government would have to approve it or what can be done by executive order, etc. But the first focus, rather than accumulating it, would probably be to shed better regulatory clarity on the environment, because the regulations that we have now are confusing. They're bad for entrepreneurs. It's confusing because it's unclear. Because Bitcoin is really new, right? It doesn't fit into sort of existing paradigms, especially doesn't fit into sort of more traditional conceptions of money transmitter businesses and money service businesses. And it's unclear. The IRS says one thing, the SEC says another. It's unclear what the status of it is. The SEC has attempted to shed some light on decentralization. I think that's also largely it's very up for interpretation. There are some problems there, I think, as well, because what they've communicated is that there's some sort of slide for how decentralized something is, where I think that's very, very hard to say, right? It leaves a lot of wiggle room. And so I think the first thing, sort of even more paramount to buying Bitcoin is actually clarifying, what the regulatory environment is around Bitcoin and making clear that, we are supportive of and encourage the development and use of Bitcoin. But we'll see. I mean, it's kind of at odds with, with state-issued currency to some extent, right? It makes for all sorts of, actually even more complex regs around taxation, right? If I'm spending Bitcoin, do I have to calculate capital gains whenever I buy a cup of coffee, or is there a threshold under which it won't matter? Right? These are all very relevant and important questions.
Absolutely. If you're a traditional investor, right? So maybe you have some working knowledge of cryptocurrency, blockchain, Bitcoin, but you're looking at your portfolio and you're managing assets. How do you think about crypto in general, given kind of your portfolio construction, and then how do you actually start to participate, if at all, into the asset class?
Sure. And so I think that there are a couple of interesting lenses to look at Bitcoin, right? So as a sort of traditional investor. So one is, Bitcoin as a form of crisis alpha, where, it serves a similar function to maybe gold in that sense, where it can be sort of a non-correlated asset to the rest of the market. It can be a safe haven when the rest of the markets are in turmoil, and that it's part of having a sort of responsible portfolio. I think that's one lens to look at it. It's something that people have proposed. I think it's mostly incomplete because Bitcoin was, it was born in the sort of aftermath of the last financial crisis. Bitcoin itself has never gone through a broad-based, collapse in equity markets. I think it's unclear how it'll perform in that universe, and I actually don't see it performing well in the event that we have a large sort of risk-off type market movement. Absent a potential sort of sovereign debt or currency crisis, I think that in that sort of lens, Bitcoin could actually potentially shine. Another lens to approach it as an institutional investor is to say, hey, this crypto thing is this big bet on a new trend, right? A new macro trend. And the trend that a lot of people have described as Web 3.0 or something else, where I think the smart way, while I personally believe that the smartest, most, on a risk-adjusted basis, the smartest thing to do is just to buy Bitcoin. A lot of investors I know are sort of opting to own a basket of cryptocurrencies, which will, sort of eventually converge on, the market winner or winners, depending on how you think the power law dynamics will shape out. So that's another sort of option to sort of play into it. The third is investing directly, which, many investors have done. The custody infrastructure for holding assets isn't quite there, and I think that'll change a lot in the next 6 to 12 months. The financial products that could exist for investors aren't quite there yet, but I think that's the third sort of option, is investing directly, and being very wary of putting money into projects that seem appealing on the basis of sort of blockchain technology, right? Which I consider largely to be a scam. But I think that a lot of the original money that came from traditional investors went into exactly that, from a lot of traditional hedge fund managers, private equity investors, fintech investors. A lot of that money went into funding private enterprise permission blockchains, where in that sort of 14 to 16 period when investors thought Bitcoin was dead, they invested in all of these private blockchain projects because that was something that they could understand. And I think that that's a really dangerous place to be. So if I were an institutional investor, I had outside clients, my sort of lens would be to allocate a very small percentage of portfolio directly to Bitcoin. And if that isn't compelling, would be to allocate to a basket. And there's a couple ways to buy baskets.
Got it. And so let's go down the rabbit hole of this enterprise blockchain, or not Bitcoin but blockchain. I tend to agree with you that 99% of those use cases or applications are complete garbage, right? And if you take a step back and you remove all of the hype and sexiness of the word blockchain, you're talking about a database, right? I mean, that is what we're talking about here.
Exactly.
And so in order for people to get that excited about a database, there would either have to be such a technical leap in terms of efficiency, effectiveness, etc., or two, there would have to be something that database allowed us to do that we previously weren't able to do before.
Yeah,
right?
It's a sort of enterprise blockchains are a back office automation system, right? It's a form of it's a back office upgrade essentially. And the awesome part is Wall Street historically doesn't put money into the back office, right? It puts the bare minimum because it's not a profit center, it's a cost center. Why invest more in the back office than you absolutely need to? This really is a way for back office teams to lobby for more financing for their for the sort of essential infrastructure that needs to upgrade. And so I don't see a lot of value being captured there. Because actually they're creating hypothetically more efficient systems, right? If there's all these sort of improved efficiencies, I don't see how it might be cutting costs, but I don't see it creating and subsequently capturing a lot of value, which is the disconnect I think a lot of people have in this ecosystem broadly, not just on Wall Street, but in general, is the disconnect between value creation and value capture. I think that problem remains sort of largely unsolved in many teams' minds.
Absolutely. And so if Bitcoin is that digital currency, right, maybe take some time to play out, but we eventually get to, hey, this is a true currency that has multiple properties that we're looking for. Do you think that there is a world in the digital age of finance where there is digital stocks, digital bonds, digital commodities, kind of all of these other applications that aren't necessarily enterprise blockchain, but they are digital assets, they're native to this environment, but they represent or have analogous, kind of properties to their non-digital peers?
Yes, Pom. I think we'll tokenize the world.
No.
No, I think that all sort of financial instruments will eventually be digital in some form, right? Even stuff that's represented with paper now in the basement of the DTCC, I think it's all going to be digital. It's sort of inevitable. And I sort of welcome that future. That'll be really exciting. I think that there will emerge kind of new capital market structures altogether, where deals will be financed sort of frictionlessly all over the world. You'll be able to move from brokerage A to brokerage B in a very straightforward process. I think that all of that infrastructure will eventually exist because I see capital markets and capital formation. I see sort of sound money first as the largest addressable market, and not by a small difference. It's by many orders of magnitude. And then sort of second thing I find compelling is actually a recreation of a capital market structure around that. So I do think that this will be somewhat inevitable. But actually the things that are interesting to me here are less around what a lot of sort of more tokenized securities offerings and kind of unique financing models and on people have proposed doing under Reg D offerings here in the U.S. What I'm interested in is actually kind of like the more subversive stuff, right? Where I would consider Binance Coin, right, BNB, Binance's native exchange token, to be an example of what I would consider a subversive, illegal securities offering is a stretch, because it might be illegal only to U.S. investors. But they basically raised an ICO, issued a token in exchange for that, had some discounts and features for holders of the token, and then issued a basically burn mechanism where they bought back tokens and subsequently burned them based on their profits every quarter. And now they're launching, very, very, very sizable crypto fund that's investing in very high quality early stage projects, and they're basically passing on returns from that fund back to users, right? So, what I'm describing is entirely a security, right? It's a very sort of unique form of security where it has this dual utility function and security-like feature where, the benefits of the efforts of Binance and their team feeds right back into the security. And many people would be appalled, right? They would consider it super illegal. But what they've now created is a very broad investor base of, tens of thousands, if not hundreds of thousands of investors all over the world, all of whom have profited substantially. The token has appreciated substantially, and they've been fully transparent. I think the next levels for them is moving to a decentralized exchange model, which they've been working on for some time, first. Second, shifting to a model where all of their cash flows are actually directly distributed on chain, right? And they can do, once they have a decentralized exchange going, they can even do potential buybacks and burning functions all autonomously. And what happens in that universe starts to resemble something much more close to a DAO structure. And while I think the DAO was a disaster, it was still exciting, right? It was exciting for me to follow. It's still exciting to me now. I think the potential for DAOs is very underappreciated. And all of these DAOs, I think, will have, equity-like characteristics, right? I think that they will exist all over the world in all sorts of different capital formation structures, and that's really cool to me. And so around that, I do see a whole new sort of decentralized financial system forming. Whether all of these will have separate tokens, I don't know. And there's a number of questions that remains there. How will governance look in this sort of a DAO-like universe? But it's cool. It's exciting.
Absolutely. Let's go back to this idea of a security and a utility, and kind of, can something have, properties of both? Can it transition between the two, et cetera? And so, in the traditional non-crypto world, there's shareholders that hold equity, and there is utility to sometimes being a shareholder, access to a shareholder meeting or event, that type of stuff. But for the most part, outside of some kind of more gimmicky type stuff, if you hold a security, it's a security, and there's not much utility to it other than the value, the appreciation, etc. In this world, we're seeing kind of the blending or that blurring of those lines. What excites you the most in terms of, as long as people continue to follow rules and regulators kind of work with them, etc., like, what do you think is possible there? Right? Is it the Binance model, or is there other things that you think could possibly be, this kind of blended security utility could be used for, that could be compelling to either investors or holders of the token that use it in an incentive model?
Yeah, I think that my favorite utility, for the most part, I hate utility tokens. I think that they have little utility. I think that there hasn't been a single utility token, a pure utility token, that I've seen designed that is thoughtfully, figured out how it could work at a future high demand equilibrium state. But
even
I think,
Ether.
Yes, including Ether. But I think that my favorite actually utility token example is something like SIA. I find SIA's model pretty compelling. And the way it works is they have two different tokens. One is an equity, a traditional sort of equity token, where it has all of the sort of same class structures as equity would have, and it has a separate utility token, which is used for participating in the network, that has a lot of the qualities that utility tokens have. In their future, sort of high demand, high throughput state, it's highly unlikely that the utility token is ever going to make a good investment, and they're clear with that from day one. But what it does offer is, exactly what it describes, right? It helps access utility in their network. While the security structure actually provides recourse for investors, right? And they have some claim, and it aligns incentives for the team. Because I think the problem with most utility tokens is that there's a strict conflict oftentimes that emerges between the incentives of the team and the incentives of their potential users and the incentives of their potential investors. Oftentimes, these three things aren't totally aligned, right? A universe where there's high velocity in utility systems, and these network tokens these networks actually do see high usage rates, is actually one where users benefit, but the team or investors might not necessarily be incentivized to do work on it or participate as an investment. In sort of a fixed supply world, oftentimes these are it's problematic for users while being more beneficial for the team or for investors. And there's all sorts of models that people have come up with to try to work around this. There's token bonding curves and kind of mint and burn models, and people are, they're trying all sorts of things, right? They're throwing a lot of things at the wall, experimenting with crypto economics and tokenomics and all of these sort of LinkedIn buzzwords almost. But the reality is that I find the security utility token, that kind of dual token structure that has clearly delineated what the incentives are for each party and aligning all of those in the same direction. I find that super compelling. I think it's really cool.
Got it. No, and I think that's a really interesting kind of thought process to go through and kind of see where that could even lead 20 years down the road, right? Let me ask this: what's the one thought that you have, or the one belief you hold that a large majority of people would disagree with you on?
Yeah. So there's a lot of things. I mean, I would already consider myself a Bitcoin maximalist, which I think is a minority position. But I think it's probably more interesting to see, sort of even in the universe of Bitcoin maximalism, which oftentimes to outsiders is this sort of amorphous blob of a community, right? Where everybody is aligned and, sort of eats steak and, hates socialists and is all sort of the same type of person and loves guns. And while I love guns and hate socialists, I'm actually vegetarian, so there's a minority position there. But I think that the more interesting question is kind of what do I disagree with most, even in the sort of Bitcoin maximalism world. And there's two things. So one is that I see credit systems and the sort of banking systems being built on top of Bitcoin as being inevitable. I think people will do them. And I think that they have the potential to work for a really long time, right? And so a lot of Bitcoin users, enthusiasts, especially those that were here from very early on, disagree with that premise, right? Including most recently, it sparked up in a debate between Saifedean Ammous, who wrote the Bitcoin Standard, and George Selgin, who is an OG cypherpunk. He was in the original. He was on the original cypherpunk mailing list. He's with, I believe, the Cato Institute now, around free banking and Bitcoin. And I actually find Selgin's view I'm very sympathetic towards it. I think that all these sorts of unique banking constructs, I think, will emerge on top of Bitcoin, and credit systems on top of Bitcoin are inevitable, and that we should kind of welcome it. I don't know if it'll be sustainable or work forever, especially because there are a number of structural limitations to how Bitcoin is designed, and these are good, right? There are limitations to what non-Bitcoin sort of bank actors can do. But I find that vision of Bitcoin to be not only inevitable, but pretty interesting. And so that's kind of one large thing that I disagree with, in the sort of Bitcoin maximalist universe. The second sort of belief that I would have that is probably contradictory to many people in the Bitcoin maximalist universe is that I really do believe that especially in the short to medium term, which I would describe as even extending past to the next 10 years, I think that Bitcoin will be winner take most, not winner take all, and it will slowly increase in dominance. I think it's at roughly 55 to 60% dominance right now, and I anticipate that that'll go up over time. but I see two things as potentially being a few things as being valuable to the market that will sort of emerge over time. I think privacy is sort of systematically undervalued. I think everyone says they care about privacy, but I don't think that's reflected at all in the relative value of projects and teams working on privacy relative to everything else, especially in the utility universe. So that's one thing I think is sort of systematically undervalued. I think some form of stablecoin. I don't think any of the stablecoins that exist right now that have launched are really robust. But I think that at least over the next 5 years, I think a lot of them sort of, by design, will be, very hard to kill, right? And they won't die for a very long time. So I actually see them holding some sort of appeal, especially because I think that the design of stablecoins, though a lot of it is misguided kind of Keynesian nonsense, I think that it's that narrative is very appealing to a lot of people I talk to on Wall Street who sort of look at that and go, wait, that kind of makes sense to me. I can see, this sort of algorithmic central bank model being compelling. So I think we'll see that as well. So in terms of how the market evolves, though long term, I am sympathetic to the view that Bitcoin is this sort of black hole. I think in the short to medium term, that there are a lot of things that'll hold value because of what the market views as structural limitations of Bitcoin for now.
Got it. Makes sense. All right. Before I end each one, I let the guests ask me one question. What question would you ask me?
I think that my biggest question that I've always wondered.
I'm so scared of what you're about to ask.
How did you come up with the virus is spreading?
Oh, man. You're the second person to ask this.
Oh, really?
Yes.
This is the second time.
So we didn't talk about... long story short, I think Twitter's full of caricatures of ourselves, right?
Yep.
And so it's the example I always use is like, imagine if we were all just in the WWE on Twitter, and there's the hero, the villain, the announcer, the referee, etc. And those characters all have taglines, right?
Right.
If you ever watched wrestling growing up, you could probably tell me, the Undertaker, The Rock, Steve Austin, all the characters.
Yep.
And so I did not have a grand plan when I first said it. It was more of just
you say that you say
no, I swear. So the idea that blockchain, Bitcoin, crypto was capturing the mental energy of so many people, and it was just spreading, and no one could stop it. And it was this viral phenomenon or this virus, right? And so I tweeted it one day.
It's like Snow Crash.
A little bit, yeah. And when I tweeted it, I put a rocket emoji next to it, and next thing I knew, people were tweeting it back and tagging me on things, and it just took on a life of its own. Look, I tend to think that there are things that take off because they have a little bit of truth to them, right? And that's kind of why we latch onto them. That one is it's kind of run its course, right? If you notice, I don't really push it as much anymore because I think everyone's got the idea, hey, there's no stopping this thing.
Yeah.
But I'm actually surprised at how bad the crypto community is at taking what is pretty intelligent, thoughtful, many times complex ideas and work, and presenting it to an audience that probably doesn't have the same passion, understanding, etc. And so this, taking up the complex ideas and making them simple, right, and really delivering them to a much wider audience, I think is not only compelling for Bitcoin and crypto's sake, but also it helps, right? And so I think that something like the virus is spreading is really easy for that kind of lesser in the weeds crowd to grab onto. And is that the message we want them to walk away from crypto with? No, right? But at the same time, if that gets them interested and gets them in the door, and then we can actually educate them, I think actually it can be a valuable thing.
Yeah, this is something I've written about in the past because I actually think that the most interesting sort of fundamental, quote unquote, fundamental indicator to me, counterintuitively, is actually price action, right? And kind of fund flows, right? Because that's always, a lot of people view the crypto markets as, startups with stock tickers, right?
Yep.
Which I think is kind of a flawed model for a lot of the reasons I've described. And But I think that currency markets, it's actually much more important to focus on fund flows, right? What do people see as future money, right? What are the narratives that they're going to latch on to? And I, mentioned a lot of narratives that I personally find compelling. What are the narratives that you think institutional investors are really interested in?
Yeah, so I think that the best framework for this is they have sleeves of capital, right? So they've got equity, debt, real estate, fixed income, etc. And if they see ways to deploy equity capital into this vertical, that is attractive to them. They understand what they're buying. They have a dedicated pool of capital for it, etc. I look at, take equity, so venture capital specifically, as it's like somebody raising a VC fund and saying, I have a healthcare focused VC fund, right? You're just doing venture capital inside of the healthcare industry.
Yep.
Crypto focused VC fund is just venture capital inside of crypto blockchain space, right? I think where the institutions kind of get off the rails or there's a disconnect is when they're getting pitched, hey, you should buy Bitcoin, you should buy these digital assets. There's going to be some early adopters for sure, right? And they'll probably write, single digit to lower double digit millions of dollars checks to dip their toe in the water, etc. I don't think that the majority are ready to do that yet, right? They don't understand the asset class. They don't know where the capital comes from, on their side. And so there's just some hurdles that need to kind of get jumped over before they're ready to do that. But I do think that, if you can start to show them, hey, mining, it's an infrastructure investment, right? And there's cash flow. And you start to kind of walk them through a couple of different applications of the blockchain technology, but allow them to invest without holding the digital assets themselves. I think that's a much easier conversation than, hey, go buy Bitcoin. I would not be surprised, though, at the same time, if over the next 12 months, that rapidly changes.
Yeah.
And I think that, ICE and some of these larger names, I really put them in two buckets. Some are the pretenders, right? And some are, the operators, right? The pretenders are the ones who just keep, every day there's a different press announcement and they're exploring something. They're potentially going to possibly announce a future partnership with somebody, and you're just like, what are you guys doing? Right? The operators are the ones, I think ICE is in that bucket where they're saying, look, we've already built some stuff. We're going to continue building stuff. It's going to launch in the next 60 days, and that type of kind of propensity for action, I think from a large player is definitely eye-opening to these institutions. And then, look, we've seen a couple of institutions jump already across the ecosystem. I think that, we probably need another 3 to 4 months of that continuing to happen. And then it's almost going to flip, very violently. And people are going to say, look, if you do not have this in your portfolio, you actually are not, fulfilling your duty, because this could potentially be one of the highest performing assets in a portfolio and you don't have any exposure.
Yeah. It's like I sometimes say, it's people don't have a choice, right? Like people can decide when they want to become a Bitcoin maximalist, but they really don't have a choice, right? It sort of converges on that eventually. And people will capitulate eventually, right? I'm not super worried about that.
Absolutely. The last thing I'll leave you with is I have and this is coming from somebody who fully believes in the digital age, Bitcoin being that digital currency, but digital stocks, bonds, commodity, all that stuff. Not even necessarily convinced that it has to be on the blockchain, right?
Mm-hmm.
It can just be digital. I think that when you really dig into blockchain technology specifically, I would say over 80-90% of people probably start with Bitcoin, and they have this like well-worn path from Bitcoin to enterprise blockchain to altcoins to whatever, and they end up all circling back and end up at Bitcoin.
Yep.
Right. And so like every single person I know has gone down some variation of that path where the intellectual curiosity takes you there. Right. It's, could you actually apply this technology to this application? Could you whatever? And it just takes time. Right. It's probably 18, 24 months, and people come back around and they all just, man, I could have saved myself a bunch of time if I had just, saw Bitcoin, believed Bitcoin, and stuck with Bitcoin.
I mean, there's the more you research the space, the more you look at other projects, you come back to it because there's an elegance to it, right? It's this elegance of immaculate conception, right? It's this elegance that game theoretically just works, right? It's the security model, which is the best in the world, right? It's the subservience of miners to users, consequent, sort of in contrast to what a lot of people believe. That's how Bitcoin works. It's seeing, the success of the user-activated software initiative last year in light of SegWit 2x and Bitcoin Cash and, users controlling Bitcoin, right? What we learned last year, and you can make all of the commentary that you want about Bitcoin, about its transaction capacity, about its, about a number of things. But what you can't criticize is that Bitcoin is hard to change and that users control Bitcoin, right? Miners don't control Bitcoin. Businesses don't control Bitcoin. Barry Silbert doesn't control Bitcoin. Users control Bitcoin, and that's really awesome. And once you realize the simplicity to that and the path to governments even trying to shut down Bitcoin, it all makes sense. And you can't unsee that, right? Once you take that red pill, it's game over.
We're gonna end this thing on 3 words: Bitcoin is beautiful.
Yes, it is.
Awesome, man. Thank you so much. I really, really appreciate this. You definitely have a unique perspective in this whole world, and appreciate sharing it with us today.
Yeah, I'll see you at 100K. We'll record again.